Hey guys, welcome back to the channel where we talk about investing in the stock market. Now today we are going to look at Apple, the giant tech company that most of you know. And if you have been following the news on Apple, you know they are planning to split their stock at the end of this month. Now the popularity of its iPhones, Mac computers, iPods, Apple Watches and other devices has remained strong for years, and customers are willing to pay premium prices to join this industry. Now, news that Apple had decided to split its stock for the first time in 6 years brought in a new wave of interest in the tech giant shares. Now, some investors who have always been considering buying Apple are now asking a simple question: should they go ahead and buy this share now or wait until the stock split happens? Now, in this video, we are going to break down if it's worth buying Apple now or wait until the split happens, and what does it mean for those who are already owning Apple. Coming up. You see, stock split or stock divide increases the number of shares in a company. Now, a stock split causes a decrease of market price of individual shares, but does not cause a change of total market capitalization of the company. A company may split its stock, for example, when the market price per share is so high, which may prevent small investors like myself from buying the stock. Now, despite the pandemic and the severe economic consequences it has caused, leading to Apple closing virtually all its retail stores at some point during the last quarter, and despite a disrupted supply chain around the world, Apple still posted record earnings. Now, besides announcing a record quarter, Apple also announced it will split its stock in a 4-to-1 offering come August. Now, a stock split is a rare event for Apple. Actually, matter of fact, Apple has only split its stock 4 times since it went public. Now, before we move any further, we need to understand what is a stock split means. Now, simply put, a stock split means a company has chosen to divide existing shares into 2 or more shares. For example, a 2-to-1 stock split means for every previous 1 share of a stock, there are now 2. Therefore, Apple's upcoming 4-to-1 stock split means that once the split takes place, there will be 4 shares of Apple stock for every 1 share that exists today. Say you own 100 shares of Apple today. Now, when the split happens in late August, you will then own 400 Apple shares. However, this does not mean the value of your Apple shares will increase 4 times. Now, you see, the side effect of a stock split is that the increase in shares means every share is now worth less. For example, let's say a company offers a 4-to-1 stock split like Apple is doing, and their share price is $100 before the split. When the stock goes through its 4-to-1 split, every shareholder will have 4 times the number of shares, but those shares will only be worth $25 each. In other words, the stock split doesn't make investors more money, nor does split make Apple more valuable. Apple's market cap will remain the same before and after the split. So, if there's no change, then why bother the split? So, it's mainly a physiological thing. The 4-to-1 stock split will reduce Apple's current share price by a factor of 4, making it look cheaper. Now, this could entice new buyers to snap into Apple shares because shares will be cheaper to acquire. Now, going back to whether it's better to buy now or wait until the split, I honestly don't think it matters, and here's why I think it shouldn't matter at all. Of course, from a theoretical standpoint, it shouldn't matter when you buy Apple shares in a relation to a stock split. Now, the split itself has no intrinsic impact on the company whatsoever. Now, after the split, you will own 4 times as many shares, worth roughly 1/4 the price of the pre-split stock. Nevertheless, investors tend to react in a positive way to news of an impending stock split. Now, implicit in a company's decision to do a split is the idea that the business is on a firm footing and are likely to hang into the share price gains it's earned in the past. Most split come after a period of strong performance like Apple just had. So a split announcement adds to existing upward momentum. However, if you are considering buying Apple stock before it splits, you need to consider the following. Buying a stock before it splits requires a bit extra accounting. Now, if you pay for, let's say, $440 per share for Apple stock pre-split, you need to note in your records that after the split happens, you have 4 times as much stock with a cost basis of $110 per post-split share. Because you have to understand that if you fail to account for that properly, and you may end up underreporting capital gains in the future and potentially get yourself in trouble with IRS. Now, fortunately, most brokers really they're going to do this for you. In addition, if you have only a small amount to invest and your broker doesn't offer fractional share investing, then you might need to wait until after the split in order to afford a full share. I believe it's that additional investor access that Apple cited as its primary reason for making the move in the first place. I mean, when it also comes to when should you buy it, pre or after the split, I don't think you should stress so much about it. Just like any other market timing decision, whether you buy Apple stock now or a month from now, I don't think it's going to make any huge difference, especially if you're investing for long term. Now, if you like Apple's prospects for the next 10 to 20 years, it will be insignificant whether you paid $1 more or $1 less per share. Now, those who bought Apple stock back in the 2000s certainly don't care too much whether they paid a split adjusted at $3 per share or $4 per share for stock worth well over $400 right now. The key to investing is buying shares when you can. Now, whether that is before or after Apple splits, it should work out well if Apple maintains its dominance over the tech industry. Anyway, thanks again for watching another video of dividend investing. As you know, my goal here is to see more people take control over their money. Now, we work so hard for our money, and in return, I believe it should do the same. However, it won't do it on its own. You have to put your money to work. Hit the like button if you like the content in this video, and also consider subscribing to join the journey. See you in my next video.